Hey guys, what's going on? It's your boy MercFX, and today I want to talk about the single habit that took me from inconsistency and frustration to being actually profitable. And it had nothing to do with my strategy, no changes with my strategy whatsoever. One simple trick, and it's not what you think. This is as close as it gets to one simple fix, and you like pretty much you're not instantly becoming profitable, but you're getting so close to profitability, like the actual correct steps to being profitable. Because I know that there are so many traders out there that are stuck in the same cycle 2, 3 years, 4 years, 5 years, new strategy. They just have no guidance, they have no idea what they're doing. So, what the issue is, most traders they trade blind. So, what that means is they take trades, they lose trades, they forget why they lose, and then they just repeat that mistake. And this all just goes around in circles. So, pretty much what fixes this is the journaling part. If you don't have a journal, you have no feedback, which means you have no growth. You can't learn off something that you can't fix your issues and see what you're doing right. So, what journaling actually is. So, journaling, it isn't just logging your trades. It's not as simple as just putting your entry price and your um like whether you got to take profit or a stop loss or a break even. I mean, it's not all that. It's a lot deeper than you think. So, what it shows where you leak money. It shows what triggers you to take those trades and see whether it fits your plan. When you trade the best, when you trade pretty much most profitably, and when you break rules. So, pretty much these two are probably the most important. When you break your rules and when you trade the best, it's so easy to you start journaling it and you take these screenshots. You can easily see whether you've actually broken your rules or not. You take accountability so much quicker. And then second part is the when you trade the best. So this will show what months or what like sequence of trades you're most profitable. Um, and you got to try and replicate that. The easiest way really is like let's say this is your edge. This is your edge in the first 6 months, and this is your edge in the next 6 months. So let's say you go from 20% here to -10. When you trade best, so this is obviously profitable. You've gone from 0% to 20% within a 6 month span. And then you've got this section here where you've gone from 20% to -10%. So you've made a loss of 30% in your equity curve. You can now determine, so these using these winning trades here, this is a winner, this is a winner, winner. Using those winning trades, you can pretty much see in this, let's say this is 100 trades to just keep it even. Say 100 trade sequence. See what went well here. See what your winners look like. Do they look similar? And do the winners look similar to your losses? If your winners look similar to your losses, that's fine. If your losses um don't look like your winners, then that's the issue. If you've got, let's say, this is a trade, um, this is your trade. So we've got a break of structure, got a liquidity sweep, and this is our entry and our take profit. Get tapped in, that's fine. This is a perfect trade for me. This is totally a part of my plan. Let's say similar scenario where it's like this. We've got a break of structure, no liquidity sweep, and price is very price is bullish. Okay. See it's on an uptrend. Um, I can see here that this is not a part of my plan. This is this leg of price is way too far stretched out, and it's already made its own run. And so it's completely out of my plan. So I automatically see that this loss, it's not a part of my plan. Doesn't look like my winners, and so I'm not going to take them. Be surprised how many losers you'll avoid just by looking at that. See if your winners look like this, and your losers also look like this, then you're trading good. So yeah, you got to see what happens. What's perfect? what works well in that 100 trade sequence where you've been profitable. This can be back testing, this can be live demo testing, this could be live trading with an actual with actual money on the line. Doesn't really matter. As long as you've got a data set to support it, that's what works. That's the whole point of the journal. The journal is the your own database of your own trading strategy, and everyone trades slightly different, even if they have the same trading strategy. I've learned this strategy from my mentors over the years. They trade different to what I do. Some are more aggressive. I mean, they could have taken this trade here. They take the stop loss for this break of structure, but I tend to take the most major swing points. That's just me. But everyone will have different results. So you got to find the data for yourself. You can't rely on anyone else's data. But what the journal does, hold up a mirror to yourself. This is your real edge. This is where you actually determine your win rate. What's your average yearly return and stuff like that. What my journal showed me. So like showed me my mistakes. So what I'm doing wrong. Not my losers, just what I'm doing wrong. Just mistake number 1, mistake number 2, and mistake number 3. Let's just say for argument's sake, this is reversals. I don't even have to explain it, but these are just 3 mistakes that I found in my journal. What I've done, so all these trades have gone into what had fixed it. What comes out on the end? This is my journal. My journal, I can determine now all of these mistakes. So this one, it's a mistake. I'm not going to incorporate that in my trading plan. This is a mistake. It wasn't a part of my plan either. This is a mistake. It wasn't part of my plan either. Which means my equity curve goes from something like this, where I'm not really getting anywhere because the mistakes are holding me down here. This leg of, I guess, the equity curve holding me down. This one as well. This one as well. This is where all my mistakes happen. As soon as I get rid of those mistakes I know are hurting my profitability, all of a sudden, the equity curve looks a lot smoother and just a lot better in general. 20%. This is the 1 year, 12 months. Equity curve looks a lot better. You can take away these ugly legs of price to make sure that you're actually profitable. Some of these things for me personally, number 1, like this one was over trading. I got a lot with over trading, and then I realized that if it simply doesn't fit my plan, then it's not a part of my plan. That's it. Don't take it. That's fine. There would be points where I would trade, like, I'm profitable at around 10 to 15 trades per month, and I'm fine with that. But there will be months where I'd trade 25, 30, 35 plus trades, and I'd have losing months. And I mean, it's no surprise. I'd look at my journal and see how many trades I'd taken in my profitable months, and then I'd see how many trades I took in my unprofitable months, and it was just so clear, it's so obvious. And it's just that one small fix. Okay, I need to trade less. That's it. That's done. Other than that, reversals for me, I trade reversals, but not so much as continuations. Reversals, it's just like I see price moving up like this so smoothly, and then like this reversal action where it's all of a sudden it's bearish when price has been bullish for so long. Using my data, I've known that I've been more profitable if I just leave out these quick and early reversals. If price ends up like this, then we're not in a bull market anymore. We're looking bearish, and so I'm happy. This turns into continuation leg. So I'm fine with taking that trade because now it's continuation. When trades right at this point here, like this is too quick for me to call a continuation, and so it's a reverse. And then number 3, I guess, honestly, was journaling. Like the issue I had in itself is that I wasn't journaling, so I'd trade randomly. I mean, I'd be back testing, and I'd get pretty much nowhere. And I'd started finally journaling. I asked my mentor for his journal specifically. Started using that journal. It was honestly so simple. Like you do just put in screenshot whether it was a win or a loss. I put in like whether it's a continuation and stuff, and if it's got a liquidity sweep. You don't have to do that, but I did just for clarity's sake. You don't want to overdo it. Yeah, that was the main thing. So journaling, the actual journaling aspect of things. Pretty much once I'd fixed these three, I'd found out about this. So over trading doesn't work for me. Reversals didn't really work for me, and journaling, like with no journaling, I didn't get anywhere. Once I started journaling, it all not magically fixed, but within months, I saw profitability on my live trading. It was honestly crazy. I would be trading like this was my equity curve. A lot of the times I'd trade so well first um first 6 months of the year. Then the second 6 months of the year, I'd find myself either over trading or not 6 months of the year, but just the second batch of my back testing data. I'd find myself over trading and falling into these traps of, oh, you know what, I'll start trading more, I'll make more return, or reversals, that's fine, I'll take more reversal trades, so I'll be fine. So I determined that this doesn't work for me. Then in my live trading, honestly, my equity curve just started to look like this. Just so much smoother, obvious uptrend, up 30, 20%, whatever it might be, with a consistent win rate of around 30 to 35%. That's all you really need. You'd be surprised how far you can really get with a 30% win rate. I mean, your equity curve will look a bit choppier, but in the end, you'll still be profitable. The higher the win rate, obviously, the smoother your equity curve will be, just because you're winning a whole lot more. Anyways, how to start your journal today. So, number one, screenshot every trade. You can use the links from TradingView, or you can screenshot it in your Discord or whatever it might be. But create a journal. I use Google Sheets, but you can use Excel. I think those two are the best. They're the best options. Include the profit you made, the risk rewards, whether it was a stop loss or a take profit or a break even, the date, the pair, those kind of things, those basic things. I mean, you can see in my journal when I do my monthly reviews, you can see the stuff that I put in there. It's nothing really that complex. I don't talk about higher time frame analysis and bias and stuff like that. It's really just super simple. Write out if it fit your plans. You'd be surprised how simple this might sound, but people just don't do it. Like everyone's got their own plan, but if you don't write it out and say whether this trade actually fit my plan or not, you'll just be surprised about how many trades that doesn't really fit your plan. And you've been taking those trades and it's just been ruining your profitability. And step four, review weekly or monthly. Monthly is probably the better option here. Weekly is pretty short time frame. I mean, I only take a few trades a week really, so there's just not enough to really review. And I do my monthly reviews. It's just easier. 30 days, 12 times a year. Simple as that. So review your journal whenever you want. And then step five, see what you need to improve on, see what you need to get rid of. So pretty much what I mentioned before, see what pretty much works for you, and then see what you need to get rid of. So see what doesn't work. In essence, self-awareness here is the edge. This will make you profitable. Your self-awareness in trading. If you're not self-aware and you just blind trading, you don't have a journal, and you just have the profits and losses on your MetaTrader or your CTrader or whatever, you won't get anywhere. It's literally like driving blind. You can't see your surroundings. You can't see what you're doing right or wrong. Once you start doing that and you're actually self-aware of what you're doing, then you can see what to improve on, and what to increase, or what works for you, what's currently making you profitable, what's dragging you down. You fine tune that to a point where it's sustainable and profitable. You don't want to fine tune too much. That was another mistake I did. I fine tuned a lot, where I would it got to a point where I'd even measure the volume in the fair value gaps just to see. I took it way too mathematical and technical. But you just need to see, do your winners, do they all look the same? And do your winners look like your losers? If your losers are out of place, then you need to cut those ones that don't fit your plan and are just super out of place. They don't look like your winners. Anyways, thanks for watching, guys. Stay tuned and I'll see you in the next one.